Hi everyone, I'm Larry Levin, President of Trading Advantage, and welcome to our Trading Advantage Mastermind call. This is where the Trading Advantage coaches and I discuss what we're looking at throughout the trading day. Please keep in mind, trading in any market has substantial risk and is not suitable for all investors. We're going to start with Mike Shore here, who runs our options room, as well as the director of all our coaches. Mike, let's see, you wanted to mention the collaboration that happens between our coaches here at Trading Advantage. You said you guys in the option room maybe got an idea from Charlie Lewis.
Yeah. For those of our members that haven't come to visit us, you might not know what the setup is that, we're basically, we have a big trading room. And so what does that
mean?
Here
when people come live, right?
Yeah, when people come here live. So if you've never seen it, you don't really know how it is here. But we have a big trading room, and there's always collaboration. You're always hearing banter back and forth. And, sometimes it's not even on purpose. Sometimes it's like, oh, what did Charlie just say? Oh, Charlie's talking about, Activision or whatever. But what that does is that gets, people talking. So, the individual programs are not in a vacuum. It's a total, and, sometimes you just filter it out and that doesn't really apply to me, or, I can't really do that. Or you're like, I wasn't even looking at that. Let's take a look at this. And, in the back of my mind, there's always, specifically with this time was the British pound, and Charlie started talking about that. And I didn't even bring up a chart until I heard Charlie talking about it. I was like, hey, it's about time to get along the pound again. He goes, absolutely. And so we look at it, and the new Prime Minister Theresa May, she came out, and there was kind of this in the background, this kind of maybe hope from the euro that, because she was not in the Brexit camp before this, and so they're kind of like, well, maybe she's going to walk things back and tell people to calm down. Maybe they'll do another, referendum or whatever it is. But her spokesman actually came out and said, no, that's her first priority, and that Brexit is on the table. So obviously that puts pressure on the pound. And what did they do? They took it right down to the very lows and almost to the tick of where they took it after the Brexit vote. And so, but they couldn't get through it. So what does that tell me? That's a buy the rumor, sell the fact,
Sure.
Or in this case, sell the rumor, buy the fact. That whatever news was baked into whatever they said, it wasn't enough to take it to that next leg down. So what does that mean? Well, probably it means that they're going to let this filter through, and somebody's going to say something, and the pound is going to rally because it's overdone. And so we put out a signal yesterday, and it was a simple call spread, 127, 129 call spread going out to SEP, which is about 5 weeks from now, and for 50 cents. So we're getting about 3 to 1 if we get that thing.
On the British pound?
It's on. I'm sorry. That's FXB.
Okay.
Which is the ETF, which it'll move nearly 1 to 1. There's a couple of little things in there that might not make it move exactly 1 to 1. But if the pound has a big move either way, the FXB is going to go with it. And so we did that. FXB was trading 125.84 on the close yesterday, and then of course it's not like these guys aren't talking to each other. The San Francisco Fed guy comes out and says basically that the U.S. has exhausted its possibilities. We've got to take a look at this, blah, 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 blah. Whatever that does, that doesn't necessarily strengthen the pound, but it weakens the dollar, which indirectly strengthens the pound. And the pound is trading, or the FXB is trading 127.13 this morning. So we were a nickel away from getting in. It would have been an absolute overnight home run. But more importantly, it's how the educators and the coaches here work together, and that's another. We're more than the sum of our parts here. So
sure. I mean, I see collaboration happen around here, and I think you make a good point, right? People who come, most people see us online, right? Mm-hmm. So they maybe see us on our cameras, but they certainly don't see the vast 6,500 square foot office we have at Trading Advantage and how everybody's collaborating, and that kind of thing. And I think that's a good thing. I also think that it's interesting that Theresa May is following what the voters actually asked for. She would never work as a politician here.
No, that would be
So, all right, thanks, Mike. I appreciate it. Let's turn over to Dan O'Brien, who runs our futures day trading room. Dan, we've seen the volume in the ES really drop in August. It's made it trading a bit tough. How have you been dealing with it, and when do you see some relief for us active traders?
Well, one thing is I thought that it was pretty interesting just this morning before I jumped on the train. CNBC even had a segment early this morning talking about, I can't believe, essentially, how low the volume is, and yet they're making new all-time highs every day. So it's even so weird that the producers on the show decided, well, we need to talk about this. So it's not just you and I.
Sure.
It's everybody
It's
is
about
pulling
time.
their hair out and saying, what in the heck is going on? And when it gets to that point, there could be, people might start looking for a reason to sell. Charlie Moon and I were just talking about it before we came in here, a little collaboration again. And sometimes people just look for a reason to take profits. And that may happen on Wednesday. So you ask what might get it going. And there's been a few FOMC minutes where ladies and gentlemen, it's not a report, it's just the minutes of what they talked about in their last meeting. And sometimes there's some clues that come out. And with the Fed guy, who was it, Williams this morning?
Yeah.
So with the San Francisco Fed head speaking today and kind of throwing a monkey wrench into the, at least a little bit, making the dollar, especially the dollar yen, go all over the place this morning. There may be a little more activity, and it could come from the Fed minutes on Wednesday afternoon. So I'm kind of looking forward to that. And even today, it couldn't get any worse than yesterday, I'll tell you that much. We barely did over 1 million, including the overnight session and total volume. And
What's average, you think? 2.5?
it's actually all the way down to, I keep a track of that. So it depends on what you call an average, 10, 20. I keep a 5-day average on one of my spreadsheets, and that's all the way down to 1.25 million.
Oh, wow.
And we just did 1 million yesterday. So if it ratchets up even a little, it'll be better than a short-term average, and that could gain a little strength. But yeah, today could be a little bit better than yesterday, and then Wednesday I'm expecting a little more action. So maybe the second half of August will be better.
Let's keep our fingers crossed,
Yeah.
right? On Wednesday, or tomorrow, I guess, the Fed number is at 1 o'clock Central Time?
Yes.
That comes out?
Yeah.
Something to watch for. Thanks, Dan. Let's turn over to Mike Patton, who works with our prop options traders. Let's see, Mike, you're watching utilities from an options perspective,
Yep.
and you're looking at executing a signal today. Why don't you tell us about that?
Yeah, so Dan actually hit on the main point that we keep making all-time highs, but it's really not doing anything. Like I've been harping about that too in the room, that we'll make a new high, then just retreat, then we'll make another little, and then retreat. And
the
range
retreats aren't even that
yeah,
much.
and
The
the
volatility
range
is
is just so
nothing.
small. So like it looks like whenever someone in the room says, "Man, the S&P is really selling off," like, yeah, it moved the whole point from top to bottom today.
Right.
So-
But when every bar is so small, it's relative, right?
Yeah.
So like when you zoom out the chart, it's like, oh, okay, I see what you mean. It's like, yeah, we're not moving at all.
Sure.
Right.
So obviously we're all looking for more volatility. So the good side about XLU is it typically does lag behind the S&P. So as the S&P gradually creeps up, I just wait and wait and wait, and then eventually when it just has one little down day, XLU tends to go up. And that's how we played it over and over again in the past. So for right now, since it was down pretty sharply yesterday, since we had a really great bullish day, and I'm being yeah, we just went up a point in S&P. So that brought the XLU down a lot. So we're going to do the same thing we did last time, get into a vertical spread, probably a 50 half by 50 vertical call spread, 2 weeks out, and hopefully we get the same results we've gotten multiple times. I mean, I think we've only lost once out of more times I can remember in XLU. So
Those have been good signals for us.
yeah, it's been very consistent. So it's the perfect thing to play in this environment, because if the S&P just goes sideways or slightly bearish, usually it does well. The only thing you got to be worried about is if we have a market crash, and then since we have a vertical spread, it doesn't matter because we can't lose more than what we put
Sure.
in anyway.
Plus, maybe you get stopped out of that, but there'll be a lot more opportunities if we have.
Yeah, it's not, what I usually do with it, I just pay the amount that I'm willing to risk. That's one of the major advantages of options. You can do that. So, you say, I'm going to risk 10 cents and that's it. And it doesn't matter what happens after that. It either goes your way or it doesn't. So, by playing it that way, it's worked out vastly better than doing it any other way. So that's why we just keep doing the same thing.
All right, cool. Why don't you update us next week?
I will.
Thanks, Mike. Turn over to Chris Mullaney, works with our prop futures traders. See, Chris, you say in oil market, we continue to see higher highs and higher lows. Do we now call the oil market an uptrend, or what do you think about that?
Yes, I do think we can. We've successfully gotten above middle, and from when we tested the 40 area, popped into the 39s a little bit. I mean, it's really just shot up like a rocket. A lot of really good trade signals last week on the way up. Played that thing like we owned it for the most part, and now we're still a little bit shy of contract highs. It looks like overnight we got there. I'm looking for a number of 46.13, and we're very, very close. So we'll see what the day session does for us.
Still, we're just in the middle of the September contract, right?
Yes. Yeah, we're going to be rolling over probably maybe as soon as tomorrow.
And do you care in your room at all about, right, OPEC talking about trying to shut down production and helpfully push these markets higher? Does that come into your thought process at all, or is it just about the charts?
I really don't. Yeah, it's just about the charts. What we want to do is be aware of when this information is coming out and being pumped into the market.
Sure.
Let all of the amateurs move that thing around a little bit, let it settle. And if the market's going to move, the market's going to move. We're going to see it on the chart. So
Sure.
we're going to be able to get direction that way.
So don't necessarily watch the fundamental news, but know when it's going to be coming out.
Yes.
I like that. That's good advice. Let's turn over to Charles Moon, who runs our equity room. See, Charles, you're talking about how to deal with markets that are constantly in new territory. How do we deal with a market that hasn't been here before? There's no resistance. What do we do?
Right, that's the question. How do we navigate in the unfounded territory, or Patrick and Chris would say in white space? Realistically, it's more important to understand chart structure. If the macro markets, if stocks are trading at 52-week or all-time highs, it's very foolish to believe that you could buy at the highs and just have that blowout extension. And where people get drawn in is that they've jumped into the hype and gotten rewarded for it. And what we're doing right now in the stocks program is we're buy heavy. There's no doubt about it. I think every single one of our signals is on the long side, because that's the definitive trend. That's the trend in the stocks. But we've really centralized and focused on the R&R available. We're trying to reduce the risk exposure and give ourselves as much reward as possible. And so if we are trading up into the highs, we want to be trading up into these levels with profits. If we're going to be trying to trade in unfounded territory, really what that is that we could guess what the potential may be, but if we're at all-time highs, there is really no guiding light in terms of our reward.
It's just a guess.
Right, but we know where our risk exposure is, and that's definitive. And if that's really wide and expanded, especially in some of these big movers like NVDA, for example, you could get yourself in a really, really difficult position. And the problem with retail traders that have had difficulties in the market is they have that theory of this has to recover, or this can't extend any lower. This, or how could it not move any higher? It's almost like a drug, so to speak. And the best example I could give about this is VRX. How could VRX continue down? It's down more than 50%. It's down more than 75%. And we're talking about one of the biggest hedge fund managers that controls billions of dollars caught up. I mean, their cost average price anywhere from $200 to $180, and VRX is trading, I think $24, $25.
Jeez.
And on the way down, they continue to press their bet, meaning cost average.
What choice do they have, I guess, at this point?
Yeah, I mean, when you're a billionaire hedge fund, and there's absolutely no diversification in your portfolio because you keep leveraging your position, what can you expect? They say eventually it'll come up. Well, I believe VRX traded at 260s a year ago.
Sure.
And you can see where we're at right now. And there's absolutely no chance of recovery to that level.
I mean, their cost average might be over $100.
Right?
So to get to like 90, they'll still be losing money.
Right.
And that's,
and that's the
50 bucks
problem.
higher.
And it's not like it's, you're holding on a couple hundred shares. You're holding on, a multi-billion-dollar
They
position.
might own 3 or 5% of the company.
Well, he's on the board of directors now. Isn't
Yeah, he has to be. He has. I think himself and 2 other members from his hedge fund pressed to be onto that level, and they helped initiate the new CEO, and they still haven't recovered. They got an upgrade yesterday. They popped up and they dropped immediately because the short interest is pretty substantial
Sure.
in that stock. They want to protect their profits. So that's just all I'm cautioning here. You're in this level. You have to trade with caution. You have to be, I don't want to say nervous, but like Dan was mentioning, people are going to be looking for a reason to take profits because, we had all 3 major markets close at all-time highs. People don't know really what to do. They don't know if there's going to be continuation or there's going to be that fallback. Mm-hmm. And when I first got into trading, it was when we made new all-time highs, there was an immediate pullback. Sellers looked to immediately hammer that, and buyers immediately looked to take profits. And while we would eventually climb and pop, we would get that hit. This is just shades of like 2012, 2014, where we would go, 2.5 months making new all-time highs. I believe in 2013 or 14, we averaged a new all-time high once a week for that whole calendar year. So this is what the shades are right now. light volume, no volatility. There's no one stepping in the way, and this is where buyers get sucked in.
Sure.
They just get programmed to thinking that it could only go up, and then they face, of course, reality.
So we got to think about that risk.
Right.
That's the key, right?
Right, especially with FOMC come out tomorrow.
Yeah, for sure. Okay, well said, everybody. I appreciate it. Thanks for tuning in to our weekly Trading Advantage Mastermind calls. These happen every Tuesday at 8 a.m. Central. As always, we'd like to hear from you. If you have comments or questions, email me at larrylevin@tradingadvantage.com. Thanks for listening, everybody, and have a great trading day.